Good morning, traders, and welcome to Phoenix Blues Morning Update. Today is Thursday, the 15th of September. My name is Nishal Patel, and I'm going to give you a quick snapshot of what's happening on the markets this week, and particularly focusing on what's happened yesterday and the rollover for today. Now, I think the best thing for us to do is go straight over to the charts. I think the very first thing what we're going to do is just have a quick look at WTI. So we're looking at WTI right now on the weekly time frame. We can see that weekly is, the price of WTI per barrel right now is floating at 44.15 with this particular broker. And it really has been falling short this week, as we can see. It's taken up the low from the previous week and is currently sitting at a level, as we can see on my cursor on this chart. Definitely an area of support and resistance. So, if you're thinking about selling this right now, you're selling into support effectively. So be careful. What I would be looking for is a break and retest of this. You've only got a few days left of this week, so I wouldn't urge people to get onto this unless if you're taking it on an intraday format and price action has climbed a little. But going to this, we did have inventories coming out yesterday. Inventories were a little better than forecasted. Not as good as they were expected, but still nonetheless, as we can see this week on this daily time frame hasn't been favourable on WTI or oil in general. As I said, it's coming down and it's just sitting at this level right now of around $44 a barrel. That being said, we've also had a problem on other commodities. Let's have a quick look at gold right now. So just having a quick look at gold, and in fact, what I'm going to do is I'm just going to take off an indicator we've got there. I'm just going to try and remove that as quickly as possible. Let's do that now. What we have in front of us is obviously the daily time frame on gold, and which has also taken a drop, as we can see. This week hasn't, again, been favourable on gold itself. Please remember that we obviously have had certain bouts of dollar strength. I think it looks as if we're going to come to the end of a dollar rally right now, especially with what's happened. We did have import data coming out from the US. Again, that wasn't too favourable on from the state side either. We had data released yesterday, which included import prices for August. That fell by 0.2%. Which really, I think import prices have really been tightened or constrained by strong dollar, and as we saw earlier, cheap oil, and oil has been very cheap recently. And if we compound that with wage growth and inflation running persistently below the 2% target from the Fed, it didn't really help import prices during the month of August. And that in turn means that a lot of the commodities, I wouldn't say there's a direct correlation between them, but definitely so for the price of the dollar, has helped turn around a lot of the price of the commodities. Now, as I said, there's no direct correlation between them, and we did have that data out yesterday, so I just thought I'd mention it in. But right now we've got gold sitting at 13.1936 per troy ounce. Did hit a low yesterday. I'm just going to show you what that low was on this daily time frame here. The low was at 13.70. Literally come off that level again. We're on the daily time frame. If you follow my cursor and this horizontal, you should definitely see support and resistance across that. Resistance back in July and support at the start of mid-June, resistance and support through towards the middle and the end of July. and now we're back in September, back at that same area. Price action is within that same range, and probably looking to support itself off. Could see a slight break of that and pull back down. Really depends on what the dollar's going to do. The expectations from the Fed for next week don't look favourable for a rate hike now, which is it's very much like a yo-yo right now. There is a certain amount of volatility. There's a certain lack of volatility, I would say, and that really is coming from investors sidelining themselves or pushing over to safe havens because they feel a little uncertain. You know, an uncertain environment does not fare too well with the investor, and definitely they don't like it. They want to know where they're going to see their profits going to be made, and right now they can't see it. So that is definitely having knock-on effects to the rest of them. Having a look at the dollar index right now, hitting off the high. Having a look at this 4-hourly time frame, just have a look at this daily time frame. As we can see, had an inside bar from the previous day. Really, we saw the dollar drop yesterday from its bullish momentum from the start of the week. One day on, one day off. A little bit of uncertainty. Not really too sure. Is favouring the strength in the dollar, so potentially this rally up on the dollar is tying down or dulling down a little, especially with expectations of the Fed changing. I've been reading news on certain polls that have been happening on various economists and traders alike and investors on the likelihood of a rate hike, and it seems to be falling day by day. I think the last count that I read was a 15% potential, 15% chance of a hike for this month. And remember, last week it was closer to 70, so really is falling day by day. Dollars, as I said, tailing off, so we'll probably see that as a knock-on effect onto the rest of our markets. The indexes didn't do so well yesterday, and what we'll do is we'll just have a quick look at an index now. In fact, if I just skip straight over to the S&P, I'm just going to have a quick look at the S&P right now. Let's just use that template. There we go. And we're looking at an hourly time frame. Again, let's just move over to this this daily time frame. Tells a clearer picture of what's happened after that sharp movement down. So we're really seen a bad week, especially on this particular index. I'm showing you this particular index on purpose because right now we've got the 100 moving average and daily pivot point, obviously calculated of yesterday's price action, intersecting or exactly at the same level. Price action is actually coming up to it right now at 21.26 circa. Price action floating at 21.24.1. Coming up, probably looking to test it. May potentially head straight back down to IS1 if you're using your pivot levels. There are numerous levels that you can go through, and I would advise you to check and cross-reference off the weekly time frame, and you have a clearer picture. And in particularly these highs up here, and finding those highs as potential support and resistance as well, which I'm sure that many of you would find. And that backing, propping price action up. There are a few sectors that haven't done so well. In particular, yesterday, the energy sector did hammer down and really has had a knock-on effect onto a lot of the American indexes. The Japanese and the Australasian indexes followed suit, a little jumpy, and we've seen an upturn this morning in Europe. So it looks, in all honesty, it looks a little jumpy. It doesn't look like the best trading environment for an end-of-day trader, most certainly. Again, looks like the fielding ground of an intraday trader more than anything else. Just flicking straight over to the yen. This has been quite interesting this week, even though it seems like it's almost trapped within this range, or one could say it's a symmetrical triangle, and I'll just draw that on for you guys now, just so you can see it. So if we just take these highs here, like so, and we can take these lows, or we could even stretch it back as far as August. and we could say we're almost trapped within a symmetrical triangle looking to break out at some point. Let's not forget how the Japanese, how the Bank of Japan deal with their own currency, and they prop it up themselves. So I think many investors and traders alike they're not so keen to carry on shorting this particular chart when it gets close to the 100 range. It's just floating at 102 right now. Every single time it's come close to that 100 range, it literally has popped itself straight back up again. So trading within that range yesterday, of this lovely high test bar coming up, breaking over through that 103 level, and price action is in the mid 102s right now. Potentially, again, as I said, if you are an intraday trader, you can take pips off this from the top to the bottom of this range, and do favorably well if you're looking for quick pips. If you're an end of day trader, you're gonna find it hard to make any clean, decipherable movement, particularly on this currency pair. Good. So moving straight on to the euro now. This was a key level that I was looking at the start of this week. Initially have made good intraday profits, just trading it short off this level. But as we've seen, very much like the yen, has stayed stuck within this tight range, trapped trapped range bound effectively. Hasn't really moved and hasn't seen decipherable movement. Moving straight over to cable, looking at this 4-hourly time frame, we see price action coming up to the pivot level right now. Having a look at the daily time frame, and we can see a clearer picture of what's happened. Again, sorry, I'm just going to pull off this. I'm just going to pull off this indicator. So just bear with me a second. I'm just going to take this off like so, and there we go. You should be able to see price action now. Price action breaking my 20 moving average at 1.3203. Had gained on the dollar straight off yesterday. As again, looking at the size of these bars, very, very small over the last week and a half, 10 days, and it's a completely different scenario to what we had almost a month back. The size of the bars, and if you have, you can put ATR up and you can see the difference in the size of the bars and how they're changing based on indecision and uncertainty on the marketplace. And that, right now it seems as if price action on cable has settled. It most certainly is creating these set of higher highs and higher lows over the course of the last month. So definitely good signs, or bullish signs, for the sterling, potentially looking to break this high out if we see the momentum on the side of the sterling, after creating this low down here, still higher than the previous low. So again, good and favourable on the sterling to try and fill this gap created from Brexit, as we already know. Okay, guys. So if I'm going to leave you with one thing, I would say be careful for the final 2 days of this week. I think definitely a lot of investment houses and large trading firms are going to keep themselves banked and sidelined. They're not going to make any drastic changes to their exposure of their portfolios, and thus we'll probably see a reflection of that onto the market at least till after the Fed have made a conclusive judgment on what's going to happen. And the data being released isn't looking too favorable this week. As I said, it's very much like a yo-yo right now, with the rate of the dollar and how things are going to pan out for the Fed. But that's me wrapping up for today. I look forward to speaking to you guys soon, and please carry on following Phoenix Blues morning updates for you to have an insight onto how the market's going to pan out. Until next time, happy trading. Bye-bye.